Hi everyone, my name is John Maher. I'm the Chief Investment Officer at CCR Wealth Management. Today is Thursday, October 3rd, and this is a brief market summary. So as of today, the market has been trading in a range since the last time we spoke with you. Go back to June and we see that we're probably roughly midway between the highs and the lows over that period of time. And over this period, there's been two dominant themes. The themes have been the on-again, off-again relationship or trade relationship between China and the United States. And of course, there has been another dominant theme surrounding interest rates and what the Federal Reserve is going to be doing, what they've done and what the outlook might call for going forward. So while we were at near the highs of the S&P 500 over the last couple of weeks, we've failed to follow through. And I think it's probably likely that we have had a contrasting and maybe canceling effects between the positivity surrounding interest rate cuts and some of the more pessimistic developments that have lurched forward from time to time between China and the United States. A week from now, China and the United States will sit down again and we'll see what happens. We can add to the concerns or add to what we're paying attention now going forward, and that will be third quarter earnings. And I think the thing to watch for third quarter earnings is just how well our consumer company is doing, and we'll be looking for that. There's been a lot of pessimism surrounding U.S. manufacturing numbers, PMI figures that we've spoken about in the past, but the consumer is 2/3 of gross domestic product here in the U.S., and we'll find out how the stocks and companies catering to consumers will be doing. As we take stock of our returns, our portfolio returns over the last 12 months, I think it's important to keep in mind something that investors sometimes lose sight of, and that may be that recent activity in the stock market may have less to do with your trailing 12-month return than what happened to the stock market going back 12 months. Where was it then and what was it doing? So we're in this kind of interesting place right now where if the market just stopped and did nothing between now and the end of the year, most investors in a moderately growth-oriented portfolio are actually going to see their returns rise. We've been skipping along with low single-digit returns for the last couple of months now. But as we know, a year ago, the market started its fourth quarter slide. So reaching back a year, we actually end up with lower starting points. Mark Palmerino and I have a more detailed discussion in a video you'll find nearby regarding diversification. And we think it's important to spend time talking about diversification because as we've been pointing out for the last 2 years now, we do expect this volatility to continue. And a diversified portfolio is your best defense against market volatility. Market volatility cannot be really avoided, and you're going to end up jumping out of a perfectly good portfolio if you're trying to market time. We avoid that. If you take a look at the graphic that we're showing right now, I've shown this before in past communications, but this has been updated through the end of last year. And I think it's remarkable that going back 18 years, a comparison of the S&P 500 versus a portfolio diversified among different stock markets, small cap stocks, non-US stocks, as well as bonds, has actually done better over this period of time. And we see that investors get caught up with emotional decisions that they're not beating the stock market on the upside, or that they're losing any money at all when the market goes down and bad decisions get made. So we build durable portfolios at CCR Wealth Management, and we focus on diversification. And for the last 18 to 24 months, we've even sought further diversification where possible. One final note I'd like to make, and that is state the obvious. It is election season. There's a lot of noise pouring out of TVs, computer screens, on our telephones, informing us of the most outrageous statements or the most, the latest scandal on one side or another. And we would beseech our clients to ignore this, at least as it pertains to their portfolio. Making emotional decisions on your portfolio based on the latest political news is almost always going to end up in a suboptimal result. And if you need a reminder for that, just ask one of the many, many people who bailed out of their portfolio in November of 2016. Thank you very much. And if you have any questions, please don't hesitate to call me or call your financial advisor at CCR Wealth Management.